Hi, everyone. Welcome back to another session on strategic financial management. So today we're going to learn about absorption, marginal, and ABC systems. So first we're going to look into, so these are the costing methods. There are three types of costing methods that we will be learning, and they are absorption costing system, marginal costing system, and activity-based costing. So in the previous sessions, we've learned many categories, many things under costing, and now we're going to learn about costing methods. We learned the definitions of costing, definitions under costing, accounting or cost accounting, and then we learned about costing processes. We learned about the difference between cost accounting, management accounting, and so on. And now we're moving on to costing methods. So we have three primary costing methods under this, which is absorption, marginal, and activity-based costing. So before we move on to these three categories of costing system, we have to learn something called cost drivers. So I want you to listen to me carefully because this is very important. Understanding the meaning of cost drivers is very crucial because you need to know the meaning of this to understand absorption, marginal, ABC, and we're also going to learn something called a traditional costing system. To understand this in detail, you need to learn about cost drivers. So let's see what cost drivers are. A cost driver is the direct cause of a cost and its effect on the total cost incurred, meaning they are the factors that cause a business's cost to increase or decrease. Right? So they are the ones that triggers the increase or decrease of a business cost. For an example, we have direct labor hours worked, or let's say generally labor hours worked. What does this mean? If you work for more hours, you're going to get paid more. If you work for less hours, you're going to get paid less. So labor hours worked is a cost driver. Labor hours work is a cost driver. So you work more hours, you get paid more. You work less hours, you get paid less. So this cost drive is going to determine your pay. Right? So this is the labor hours. This is known as a cost driver. And then you have number of machine hours used. Now, machine hours, in order to calculate maintenance, energy, or depreciation, we need a cost driver called machine hours. So if you use a machine for longer hours, then it means more machine use, which is equal to higher running costs. So how do we determine this? By using the cost driver machine hours. So if we need to calculate or if you need to determine something, right, in order to, for an example, if we need to calculate the pay of an employee, how do we calculate? By finding out how many hours the employee had worked in the organization. Yeah, so this is a cost driver. Then I can give you another example. Say for an example, in a production or a manufacturing department, right? A production department, a manufacturing department. So you decide or you see how many products are produced by the company. So in the manufacturing, let's just focus on the manufacturing department. So in the manufacturing department, we're going to find out, okay, how many products are produced? How many units of products are produced in this particular product? So product A, how many products? Products B, how many? Product C, how many? Number of units produced. Yeah, so how do we determine how many units? Through the number of units produced. So this is a cost driver. Clear? So these are some of the examples of cost drivers. Find another example that I can give you. Customer service or full and delivery cost. So customer service, you can determine on how many customers are served, number of customers served by an employee. Full and delivery cost by the distance traveled by vehicles. So this is called as cost drivers. So I need you to keep this in your mind because you're going to need this term. You have to understand the term cost drivers for the rest of the session and also the next session, right? Don't forget. So remember, cost drivers, what do? They determine, or these are the factors that causes a business cost to increase or decrease. So the easiest example that you can remember is labor hours worked. If you work for more hours, you're going to get paid more. You work for less hours, you're going to get paid less. So this is cost drivers. And now we are moving on to something called absorption costing. What is absorption costing? Now, absorption costing, this method of costing treats all costs of production as a product cost. So they consider all costs of production as product cost, meaning when they calculate the final cost of the product, they calculate all cost, including variable and fixed cost. This is called as absorption costing, right? So absorption costing, under this method, it does not distinguish between variable or fixed cost, right? And absorption costing, there's another term that we use for absorption costing. It is also called as a full cost method, right? Full cost method. So as you can see here, you have the product cost. This includes direct material and direct labor, variable manufacturing overheads, and fixed manufacturing overheads. As you can see, all the costs are taken into consideration when it comes to absorption. Clear? This is known as absorption costing. And now let's move on to, marginal costing. Right, marginal costing is a little different than absorption costing. Now, marginal costing, they only include variable costs. As you can see here, look at the definition. Sorry. In marginal costing, this is a definition that is taken from CIMA, right? CIMA. This is taken from CIMA. It says, in marginal costing, only variable costs are charged as a cost of sales and a contribution is calculated. Fixed costs, they are treated as period cost and they will be charged to the profit and loss account. So when you're calculating the profit or the loss of a company, the fixed cost will be taken into a consideration, but as a part of the period cost, not as a part of the product cost. For the product cost, under marginal costing systems, only variable cost will be taken into consideration. All right. So what marginal costing is actually an alternative method of costing to absorption costing. It's an alternative method. And when it comes to absorption costing, this is best for external financial reporting, whereas marginal costing, it's good for break-even analysis. And when it comes to simplicity, absorption costing is actually more complex compared to marginal costing, whereas marginal costing is more simpler compared to absorption costing. So this is marginal and absorption costing. And now we're moving on to finding the contribution per unit. Contribution per unit and the total cost. Here we are going to do a calculation. So as you can see, I'm just going to train you how to use formulas, how to substitute the numbers into the formulas to get the result, as you need this training to do ratio calculations, right? So all the information that you need to calculate the contribution per unit and the total cost is available. Let's read the question. First, let's go through the formula. The formula says contribution per unit equals to sales price minus variable cost per unit. And again, sales price, you have to take per unit, not the total sales price. It should be sales price per unit because you're finding the contribution per unit, per one product, right? As per one product. And then you have total cost. We've already done this. I think we've come across this formula before, if I'm not mistaken, which is total cost equals to TFC, total fixed cost plus total variable cost. Now I want you to find the contribution per unit and the total cost of the product right now. I'm going to give you 2 minutes. I'm going to give you 2 minutes to calculate it. And whoever gets the result, please drop your answer on the chat box. 2 minutes. I think 2 minutes is more than enough. And whoever is ready, okay, let's do it this way. Whoever is ready with the answer, please raise your hands. I want everyone to do it. please do it because you're going to get into a lot of trouble when you do ratio calculations. Okay, so start now, start your calculations now. See how you substitute the answer, substitute the numbers into the formula. Okay, I can see that Zira is done. Good job. So I'm gonna, as I promised, I'm gonna give you 2 minutes. So 1 minute is gone. I'm just gonna give you 1 more minute. All right, time's up. So we have Zira, Kaushi, Nalin. Okay, so I'm gonna give the chance to Zira to answer the first question. Zira, what's the answer for the first question? What is the contribution per unit?
74 pounds.
74 pounds, that is correct. So how did it get it? Selling price per unit minus variable cost per unit, which is equal to contribution per unit. Now the selling price per unit, so they've made it easy for you. They've already given the selling price as per unit, which is 98 pounds. 98 pounds minus the variable cost is 24, which gives us the result of 74 pounds. So this is the contribution per unit. And now I want, okay, since Kaushi finished before the others, I'm going to give this opportunity to Kaushi. Kaushi, what is the total cost?
59,000.
That is correct. That is 59,000. So now you may ask me, the others, the rest of them who did not do the calculations, how did you get 59,000? Right, this is how it is. So 59,000 total cost equals to total fixed cost plus total variable cost. So total fixed cost is already given. As you can see, fixed cost, 35,000 in the period. So they never said, or they never mentioned the term per unit. They said 35,000 in the period. So that means this is the total fixed cost, right? This is the total fixed cost, which is 35,000 pounds. Now we have a challenge. Total variable cost. How do we calculate the total variable cost? You can see the variable cost per unit has been given already. And the units, the total units produced by the production department or by the organization is also given. So what do we do? 24 into or multiplied by 1,000, which is going to give you 24,000. So 35,000 plus 24,000 is going to give you a result of 59,000. So 59,000 pounds. So this is the total cost. I hope everyone else understood. Is everything clear for everyone? Did anyone struggle in getting the answers? No? All good? Yeah? Okay, so let's move on then. I'm just going to give a couple of seconds to copy down the answer for whoever who did not do it. All good. Okay, great. So just take a couple of seconds. All right, let's move on now. Okay, we have another question, but now it's a little complicated compared to the previous question, right? So here it says the ABC bike company makes 100 bikes each week and its costs are as follows. So these are the information that is given to you. The ABC bike company, it produces 100 units of bikes per week, right? And its costs are as follows. So remember, the ABC company is giving you the information for 100 bikes, right? 100 bikes. Direct materials, 4,000. Direct labor, 5,000. Production overheads, 5,000. Investigations into the behavior of cost has revealed the following information. Direct materials are variable cost. So they've decided direct materials are variable cost. Done. So I'm just going to mark it. It's easy for you to calculate. So direct materials, variable cost. Direct labor is also variable cost. Of the production overheads, of this, they say, let me change the color. They say 2,000 pounds fixed cost, okay? And the remaining, which means 3,000 variable cost. 3,000 variable cost. The selling price of each bike, I repeat, the selling price, each bike is 200 pounds. So I'm going to mention it here in case you get confused. So 200 per bike and everything is in pounds. So what you have to do is calculate the variable cost per unit. Variable cost per unit. Now remember, the amount that has been given here are all for, or it is in total. You have to calculate the variable cost per units. Again, there are two methods where you can do it. Either calculate the total contribution and then divide it by the number of units, or take variable cost per unit, selling price per unit, and then calculate the contribution per unit. That's up to you to decide. And then the absorption cost per bike. So give it a try. I'm going to give you 5 minutes. I think 5 minutes would be enough. So I'm going to give you 5 minutes to complete it. And when you're done with the question, you can raise your hand. So I'm going to, the first hand I see, I'm going to give her the opportunity, him or her, the opportunity to answer the question. So please go ahead. I want everyone to try it. Everyone, please try it. And for those of you who forgot, absorption costing or absorption cost per bike, how do you calculate? You simply add all the costs to get the total cost. So absorption costing is equal to the total cost of the product, right? That is the absorption cost. We have 1 more minute. I want everyone to give a try, please. It's not that difficult. If you can't do this, then I doubt how you're going to do the ratio analysis, because compared to this, those calculations are a bit complicated. But anyways, since technology is advanced, you can use Excel sheets to do the calculations without a problem. Okay, time up. So let's see, only 3 people finished it. How about the others? Okay, 4. What about the others? It's easy, guys. It's very easy. The formula is given. You know the formula, right? Variable cost per unit equals to selling price minus variable cost per unit equals to contribution per... Oh, you're supposed to find the variable cost per unit. Okay, no problem. So you just have to switch the, switch things here and there. Not an issue. So you have the original formula, which is contribution per unit, right? So contribution per unit equals to, what's the formula for the contribution per unit? We did it in the previous question, sales price or selling price per unit minus variable cost per unit. So now you have to take the sales price into the other part. So that's it. And then you're able to do it. And then we have the absorption cost per bike. Okay, let's see how many have finished. Still 4. Oh gosh. What about the others? You could give it a try. Oh, what Nimansa? Nimansa, Shanuda, Niaz, what about you? Kasun, Fahmi, Fahir, Anthony, Ahtas, Ahsan. What did you even try to do it? I hope you tried. Anyways, let's go to the calculation now. So we have Kaushi and Zira. Since Kaushi and Zira already answered the questions previously, so with their permission, I'm gonna go with Nalin and Zahra, if that's okay. Kaushi and Zira, you okay with that? Let's give the opportunity to the other two.
Yes.
Yeah. Okay. Thank you so much. Zira, you good?
Yes, that's fine.
Yeah. Okay. Thank you so much. Right, Nalin, what is the answer for the first question? Variable cost per unit.
120.
Very good. Excellent. Good job. So how did we get 120? Now, this is a question. Easy. So we just have to calculate the total variable cost. This is another way of doing it. So I'm going to go to the easier way. So I'm going to calculate the total variable cost and simply divide it by the number of units. So total variable cost, as you can see, I've already listed the total variable costs here. I'm going to use a different color. Let's no, that's blue. Let's take green. See, variable cost, variable cost, variable cost. That's it. You simply add these three costs. So total variable cost equals to £4,000 plus £5,000 plus another 5,000. Sorry, not 5,000, £3,000. Sorry, which is this, right? This one. £3,000 because they say out of 5,000, 2,000 is fixed cost, 3,000 is variable cost. So that's going to give you the answer 12,000. So 12,000 divided by 100, which is the number of bikes. And then, so total variable cost per unit, which is per bike, is equal to 120. £120. Is that clear? The rest of them, the rest of the students who did not raise their hands, is it clear? If you have any questions, clear it now, please. It's clear, all good? Yes, okay, great. Now we're moving on to absorption cost per bike. I think it was Zahra. Zahra, could you please tell me the answer? What's the answer that you got?
140 books.
140. Okay, let's see. Let's see. I did not calculate the absorption cost yet. So let's see. Let's calculate. So absorption cost is basically the total cost of the product. So absorption cost per bike. So first, let's find the total absorption cost, right? So I'm going to find the total absorption cost, which means I'm going to calculate 4,000 plus 5,000 plus 5,000, because here, when it comes to absorption cost, you know, it doesn't distinguish between variable or fixed cost. Everything, all the costs are taken into consideration. Therefore, the total absorption cost will be equal to 14,000. Now, we need the absorption cost per bike, which means it is going to be equal to 14,000 divided by 100. So 140 pounds. Clear? So it's that easy. As I told you, you know, you just need to substitute the numbers into the formula. That's it. You have to do the same way, the same technicality, the same thing applies to ratios. So that's why I said the calculation is very easy, right? The calculation is very easy because you have all the data that you need to calculate readily available. You just have to substitute the numbers and then get the result. And as I said before, the difficult part is the analysis and the interpretation, right? That's the difficult part. All right, let's move on to the next slide. So yeah, you can see that I've already given the answers here clearly, so you can go through the slides. And now we have another question. So this, I'm going to help you out. I'm going to help you out to do this question because it'll be difficult for you to do it alone. Not for everyone. Maybe some of them it's easy for them to do it, but some of them it might be difficult. So I'm just going to help you out. And the good thing is you don't have any calculations related to this in your assignment. So that's a good thing. Right? So you don't have this particular calculation is not tested in your assignment, right? But it is in your syllabus, and that's the reason I have to teach you. Right. Chairs Limited commenced business on 1st January 2017. It manufactures a special type of chair designed to alleviate back pain. Information on the first year's trading is as follows. Number of chairs manufactured, 5,000. Number of chairs sold, 4,500. Selling price, £110 per chair. Direct materials, £30 per chair. Direct labor, £40 per chair. Fixed production overheads, 100,000. So you can see direct materials, you know that it might increase or decrease based on the production. This means direct materials, direct labor are what? Variable costs, right? So here, direct material, direct labor, variable cost, fixed production, fixed cost. Remember that. Now, the directors ask for your help in producing profit statements using the marginal costing and absorption costing method. They say that they'll use the one that shows the high profit to the company's bank manager. So we are going to answer this question right now, but I need to take a screenshot of the question because I have to show you the other slide as well. So give me a minute until I share this screen. I need to share both with you. All right. Okay. Do you see two documents that I've shared? One is a screenshot and one is the PDF. Could you see both? Yeah. Yes or no? I don't know whether you can see it. So you have to tell me. Yes. Okay. Thank you. Right. So this is a question. This is the answer. So I've already calculated it for you, but I'm just gonna show you how it's calculated and how to get the result. So let me adjust the. I need the question and answer about it. Wait, let me make it a little more smaller. That's better. Yeah, perfect. Right. So this is, you know, the structure of a profit or loss account or the income statement. So basically you have the revenue and then you have the cost in order to find the profit, right? So, okay, to find the profit, the easiest formula, just remember profit equals to sales revenue minus the costs involved in converting the materials or in converting the sales into sales revenue, right? So profit equals sales revenue minus all the costs. So that is what we're going to calculate here. We're going to calculate the profit. So this is the formula in a nutshell. Right. So here we have sales revenue. Here we have two columns, which is marginal costing and absorption costing. So we're going to find both ways because they say the directors wants you to calculate the profit statements using both methods, marginal and absorption costing methods. And they say the one that shows the higher profit to the company's bank manager. See, I told you about window dressing yesterday, manipulation of financial data. As you can see, this is one of it. So what do they say? Use both methods, and the one that shows the higher amount will show that to the bank manager. Yeah. So this is an example for manipulation. Right. Let's look into this. Sales revenue. As you can see, sales revenue is the same for both marginal and absorption costing because they're both going to get the same sales, meaning under both costing methods, you will get the same amount. The sales revenue, the income that you get after selling the shares, it's the same in both marginal and absorption costing. Now you have a doubt. How did you get 495,000? How did we get 495,000? Who can tell me? You can just unmute your mic and go ahead. How did you get 495,000? They have the sales revenue per share, right? This is meaning per share is equal to 110. So
1,500 into
110?
1,500.
No, 4,000.
Yes, that is correct.
Selling price multiplied by number of chairs sold.
Yes, 4,500 into 110. That is correct. So 4,500 into 110 is equal to 495,000. And now we are going to consider variable cost. As you know, under marginal costing and absorption costing, we have to take variable cost into consideration. So they have given the variable cost per unit, which is £30 per chair, and £40 per chair, which is direct labor. Now we need to convert this into total variable cost. So how do we do it? Although the number of chairs sold is 4,500, the total number of units produced is 5,000. Therefore, 30 into 5,000 will be equal to 150,000. And 40 into 5,000 will be equal to 200,000. Get it? You simply multiplied the variable cost, meaning direct materials per unit, by the number of chairs manufactured, direct labor per unit multiplied by the number of chairs manufactured, and you get the total variable cost, which is 350,000, which is equal to both. Clear? Now let's look into the absorption costing. So done with variable costing. Now the next is fixed costing, right? Fixed production overhead. So here, as you can see, fixed production overhead, it's given already. The total fixed cost is already given. We just need to add it. So the total cost as per absorption costing is equal to 450,000. Right? 450,000. Right? 450,000. Is that clear? So far, is it clear, everyone? You just need to understand how this is done, right? As I said, you're not going to be tested in your assignment. No calculations related to absorption of marginal costing. Just understand the technicality, how it is done. That's it. So 450,000 is the total absorption costing. Total absorption costing is equal to 450,000. Now we need to remove the inventory, the closing inventory, meaning how much of the chairs are remaining, right? How much of the chairs are remaining? Although the selling price is 110, we need to find the cost of the product first. Only if we find the cost of the product, we will be able to find the closing inventory. Right? So how many chairs are remaining? 5,000 are the total chairs manufactured, 4,500 are sold. Then how many chairs are remaining? 500 chairs are remaining. Yeah, 500 chairs are remaining. Now, the sales revenue or the selling price of the chair is 110. But what is the cost price of the chair? Here they have given 90. Okay. How did they get 90? Who can tell me? How did they get 90? So we have the variable cost here, 40 plus 30, right? 40 plus 30, which is 70. But that's not equal to 90. There's another cost that is missing, which is fixed cost. So how do we find the fixed cost per unit? Who can tell me?
Divided by total number of chairs manufactured.
What divided by total chairs manufactured? Fixed production divided by the total chairs.
Yes, correct.
Yes, that is correct. So 100,000 divided by 5,000 is equal to 20. Therefore, we get the cost of producing the chair is 90 pounds. So 500 into 90 pounds is equal to 45,000. So this is a closing inventory, meaning in order to find the profit, we need to remove this because this does not include in this total revenue. So 45,000, we remove it. 405,000 is the cost of sales. Cost of sales. Again, we are going to deduct 495,000 minus 405,000. 90,000 is the profit as per the absorption costing method. Now let's look into the other method, which is marginal costing. So marginal costing, it's a little different. Why? As you can see, 500 shares at 70 pounds. Why? What did I tell you? Marginal costing, under marginal costing method, they don't consider fixed cost as a part of their product. They will only calculate it as a period cost when calculating the profit. So as you can see, under marginal costing in the inventory, the 20 pounds is not included. You can see here, it's not included, right? So 500 shares into 70, 35,000. So 350 minus 35,000, 315 plus 100,000 equals to 415,000. So this is the cost of sales. 495,000 minus 415,000 is 80,000. This is the profit as per marginal costing method. So when you compare both, which gives the higher profit? Absorption costing, right? Absorption costing. So the manager will go ahead with this particular statement. Is it clear? So I'm going to give you a minute just to go through the calculations, everyone. And if you have any questions, please clear it out now. Please clear it out now. So just take a minute and see whether you understood all the calculations. All good? All clear? Everyone understood? Yes? Great. All right, then. Thank you so much for attending the session today. I will see you next week with another session.